And these tariffs aren't just affecting the price of goods. The stock market swings causing investments to take a huge hit. Joining us now is Chris Hernandez, the investment advisor at Strategic Capital powered by Waterloo. Chris, good to have you with us. How are you?
Thanks for having me, Chris, and congratulations on your 20-year anniversary with CBS.
Oh, well, thank you very much. Here's to 20 more. It's going to be another down day on the market. Futures, as I just mentioned, down 800. The bond market is getting absolutely murdered right now. Let's talk about what this means for the average American out there. We've got over 70 million people that do have 401ks. That doesn't include people with retirement, other retirement investments, and nest eggs. They're watching that evaporate due to the decisions coming from the White House right now. What do you tell people to say, you know what, relax, hopefully we'll get through this?
Well, I think it really depends on the age of the individual. For our younger Americans, we're letting them know this, although a scary moment, seeing the market go down can be a good thing because you can't access your 401k until age 59 and a half without taxes and penalties. So they have a longer investment horizon. They're able to put money in as it's going down, buy more shares at a lower price. If their company's matching, they're buying more shares for them. So the name of the game for younger Americans is share accumulation. If you're approaching retirement or in retirement, you may want to look to get more conservative inside of your 401k. So we don't have another 2008 situation happen where people saw their 401ks get cut in half.
Right now, you're seeing basically in the last, I want to say the last 5 days here, you're looking at about a 7,500 to 8,000 point drop in the market right now, as we're going to probably sink below 37,000 today with the way things are starting right now. Some people, I guess, can look at the flip side and be like, okay, this is a good time to get in. But for a majority of Americans who are of, like you mentioned, that age where they're really going to count on this retirement fund, will there be enough time? Fed Chairman Jerome Powell just said yesterday things will moderate at some point, but this could now take at least a year, potentially 2 years.
Yeah, so I think for the older Americans or those approaching retirement, this is where working with a professional really is key, because I know for our clients, we were already making adjustments to get more conservative for them so they weren't seeing as big of a downturn in case markets were to turn. So I think getting a little bit more conservative inside of those retirement accounts might be a good idea if you're approaching retirement or in retirement.
If you are involved in the market, or if you're new to the market at this point, what kind of conservative measures would you have them take? I'm sure your phones are ringing off the hook right now with people looking to either not necessarily get out, but reassess and reevaluate.
Yeah, time in the market is more important than timing the market. So for younger people, just continuing to save, put money in the markets. For our more experienced in age clients, we have already started risking off. So that way they can count on those funds that are already there, the wealth that they've built.
Who are the folks that are at most risk right now, do you think?
I think older Americans approaching retirement, because like you said, if it takes time for the market to correct 1 or 2 years, do they have that time? Were they planning on working longer? So for our older Americans, I would kind of look to get more conservative or talk to your advisor and make sure that you are in the right positions.
When you're talking about like buying products right now, because we're going to see prices, especially, I'm just going to use this as an example, toys. I just saw a report on a cable network a few moments ago about owner of a toy store pays $26,000 a year in tariff prices. Because of the tariffs that have now been increased on China, because he gets a bulk of toys from China, his now price tag goes up to $328,000. Now, he's got to pay that out of pocket, even though we keep saying and keep hearing from all of these administration officials that these other countries are going to pay it. That's not necessarily the case. So if you've got to go out and buy something, okay, from an individual, like an iPhone or sneakers, all those prices are going to go up. What do you recommend? Go out and buy in bulk right now, or sit back and just save more money for this stuff?
Yeah, from the advisory perspective, I would have the person say, do I really need this? If it's a big ticket item, if it's a car and you don't really need it, I don't know that I would spend the cash. I might save that and then deploy that later. But if it is something you really need, you might want to get going on it.
Yeah. And I guess advice, if you were to give, you've got someone calling you right now that's in a state of panic, they're in their 50s, 60s. at that age, everything we've just been talking about right now, nearing retirement, and they're seeing things evaporate before their eyes. And it's not due to a pandemic or anything like it. It's something that someone that they either voted for or didn't vote for is actually doing. What do you tell them to keep them, at ease or to calm their nerves?
Yeah, so money's both logical and emotional. So logically, it might make sense for them to stay in the market, but emotionally, it's keeping them up at night. They might want to get more conservative and make sure that the funds they have are still there.
Excellent advice. All right, Chris, thank you very much. We appreciate you joining us today.
Thanks for your time.
All right.